I think that Bitcoin's days of 80% drawdowns are over, but I don't think we're going to go from, 160 or 200,000 all the way down to 80 or 75 or something like that. I don't think that's going to happen. The ETFs hold more Bitcoin now collectively than Strategy and all the other Bitcoin treasury companies. So we are more likely to see individual investors want to run for the exits quicker than corporations. The higher Bitcoin goes in market cap and price, the more stable it will become. That's what we're going to see. We're going to see the purchasing power of Bitcoin going up, and the fiat currency is denominated in, whether that be Germany, Japan, or the US. There's going to be a lot of gyrations, but Bitcoin itself is going to keep ticking up. I believe what was causing the boom bust cycle in Bitcoin, if you take a look at it from its inception to about 2022, was actually stimulus. We had global economies printing a lot of money. I think what we're seeing right now is liquidity seeking quality. And Bitcoin is representing a flight to quality versus a speculative instrument like it was in the past.
Hi, Adrian. Thank you so much for being on again.
Thanks for having me again. You're one of the first podcasts I ever went on, and I can't remember exactly when it was, but it was a while ago now.
It's been a while, and I remember I told you that you are super interesting and you should get on as many other podcasts as possible. I'm fairly certain that I told you this in one because you're an extremely interesting person, and so I'm excited to do it again.
Yeah, I'm happy to do it. And you did absolutely say that, because I remember you telling me that, and I said, okay, why not? I guess I've been doing it ever since. So.
Really cool. Before we get started with all the topics, I do this now to introduce us guests to the audience. For the few people that haven't seen your stuff, that haven't seen your first episode together, give some overview of who you are and especially why you're excited about Bitcoin.
Sure. So for those that don't know me, my name is Adrian Morris. I've been in Bitcoin since 2012. I've had a very interesting Bitcoin journey. I don't know if we need to get into that right now, but long story short, I'm a Bitcoin investor. I am also a strategy investor. I have some positions in other treasury companies as well. I'm also very, very bullish on AI and the transformative effect it can have on the world. I do have a day job still, even though Bitcoin has been very, very good to me and my investments have been good to me. I still work because I think that someone should keep working and should keep informed and should keep themselves in the market as long as possible. So yeah, that's just me in a nutshell.
That's interesting because there's a lot of Bitcoiners actually out there that say I really wanna at the earliest moment get out of my day job. I mean, I guess it also depends how much do you like your day job and if it's something that you actually enjoy. But do you think about those? Do you have a number in your head where at that point I just want to venture into something else?
Well, what's ironic about that is I hit my number a while ago, and then I set another number and I hit that a while ago. So the reason why I work right now is not because I'm trying to get rich or anything like that. I think that we are in a position, or we're in a time in society right now, a time in economy, and a time with technology where if you leave the workplace for any extended period of time, you could be quickly made irrelevant if you try to enter back in. And it's not just about the dollar amount in that case. If you think about how do you do anything in life, you have to keep yourself relevant. And I don't mean in terms of coverage or anything like that. You have to keep your skills relevant. You have to stay abreast of what changes are coming. And I think that the best way for me to have a multifaceted view is doing things that are, involving Bitcoin, involving strategy, involving purely investment, options trading, things of that nature, but also having my foot in the door and my ears to the ground in changes that are going on in the modern workplace. I do think I'm going to hit a point where I decide to fully pivot out, where I maybe go into looking at options trading as a full-time career. I've contemplated getting my Series 65 certifications. I've contemplated a few other things, but I think that the main reason why I still work is, one, to your point, I like what I do. What I do is heavily involved in data. It's heavily involved in AI, just in the way that I execute what I do. I use a lot of AI tools, and I help my clients onboard a lot of AI tools. So in my work, I'm staying in sync with all the changes that are going on in the workplace. So that's kind of the main reason why haven't left. If I was something like and this is not me disparaging any particular profession, if I was like a CPA, or if I was I don't want to say analyst, or just an analyst or something like that, I probably would have said to myself, it's time to move on. But since I work on projects that help clients onboard new systems and create data warehouses and create data lakes, ironically enough, the emergence of AI and my work has kind of gone like this. So it's allowed me to scale up the amount of work I can do. It's allowed me to scale up my income. It's allowed me to diversify my client base. So ironically enough, all of my work from Bitcoin and AI and talking about all that stuff is now informing what I do on my day-to-day job, because there's two things that I hear almost on a weekly basis. Someone asks me about a new AI tool from one of my clients, or they ask me about Bitcoin, because some of them know I'm involved in Bitcoin.
That's super interesting, and I think I truly think that in the new world that's coming up in the next 50 years, if you want to stay relevant and you want to stay on top of it, you have to study two things, and that's AI and Bitcoin. Like those are, if you study anything and you aren't aware of AI and Bitcoin, it's probably a good idea to study both of them as deeply as possible.
Yeah, I would fully agree with that. And the thing about it is, even though I've reached a certain even though I've reached a certain level, if you're a Bitcoiner just like I am, there's nothing wrong with more Bitcoin. So if most of my income goes towards my investments, I have deliberately not created more expenses. I've deliberately not, for instance, I haven't bought a home yet. People think I'm crazy for that, but I haven't bought a home yet. I still drive the same car that I've been driving for the last 8 years now, and before that, I drove a car for 12 years. I do splurge on things like technology because I'm a technology guy, but by and large, it's not a large outflow of capital. So really, what I'm working to right now is I'm just accumulating more and more Bitcoin. I'm accumulating in larger positions in certain companies like Nvidia and Strategy and so on and so forth, because one, doing that allows me to trade options and gain more income that way, and two, just as you pointed out, I think AI and Bitcoin are going to be the two largest trends that are going to be going in the next several decades, as well as probably getting into robotics. And then after robotics, I think the next big trend is going to be changes to material engineering, either through nanotechnology, femtotechnology, or something like that. I think materials engineering is going to have a very, very big boom as well in the later part of the century. And by that time, will I be old? Of course, but I still want to be in a position where I can live a comfortable life. And I'm just kind of looking towards that and saying to myself, how do I position myself best for that? And retiring two and a half, 3 decades before the average retirement age doesn't make a whole lot of sense for me. So I just think that it makes sense to keep going for as long as I can go, because the object in motion stays in motion. And much like with money, if you keep your money moving, it's going to keep growing. So that's just the view I have.
It's also the question of like, what would we even do if you're retired? Because I've not done it yet. I'm 26. I've basically, maybe if you call it relaxation till I'm 17 years old, because I've not done a lot till I was 17 years old. But since then, I was always working and school. And then when I was working, I did a lot of other projects too. So I always had like 2-3 things going on. And this has been true up until now. And so I don't have an experience in just having a year where you don't do anything. But I imagine it being super freaking boring. Like what what are you doing? Like sitting on the beach? I get bored sitting on the beach for like even 3 days. But I might not be the normal person.
No, so I think that even if I were to, so let's define retirement, right? Because I think that also helps. I don't think you and I are at the age where we can say we are retired. We don't work. We just sit around. We have our hobbies that we're doing for the next 40, 50, 60, 70 years. I don't think that works. Because to your point, you're going to get bored very, very quickly. And I don't know, I just have a theory, and I kind of think this way because of my father. So my father's 80 years old and he still works. He still consults, he still travels, he still does things. And his mindset, and this could be because he's from a much older generation, he had me older in life, is that you should keep working until you can't. Yes, you should take vacations. Yes, you should enjoy life. But what keeps you going is having a purpose. So whether that purpose is through your profession, your job, or through podcasting and investing, or whatever it is, you need a purpose, right? So I think that we should draw a distinction between retirement and having no purpose. I think you can retire but still have a purpose, right? So if I were to stop working in the terms of like consulting and what I'm doing right now, I would probably pivot entirely over to investing, like full time, go full bore with that, work the same amount of time with that. I would probably put out a whole lot more content. I would probably work on writing a book. I would probably work on doing a lot more in-depth analysis on some of the things that we see in the market. So I would still be working. I'm just not getting like, the traditional biweekly or monthly paycheck when I issue an invoice to a client, right? So, yeah, I don't think I could ever retire per se, in a sense that I don't have anything that I'm doing in terms of a purpose. But do I see myself, at some point here pivoting away from what I'm doing on a day-to-day basis? Yes, I do think that's coming. It's just a matter of when. But then again, even with what I'm doing right now, I'm looking for ways to grow it and scale it. I'm looking to build applications. I'm looking to build software platforms. I'm working with individuals on that. So who knows where that can lead me? That can lead me to an entirely different thing in the next 5, 10 years. But yeah, I don't think I'll ever just stop. I'm with you. That doesn't make a whole lot of sense to me. No.
There are, and I tried to find it next to you talking about, I found some interesting studies and some graphs that are looked at when you compare how long it takes for someone after retirement to be actually dead. And I think there's a real correlation, because if you've worked like 40, 50 years and all of a sudden the one purpose that gets you out of bed is gone, you probably there's a good chance you develop bad habits, and there's a good chance you lose your whole purpose in life, and this can be deadly to someone. This mental small degrading of the mind and the body, this is deadly. And it is something I think we should be well aware of, and especially if you're older. Like I've seen it with my two dads, and one is already dead and one is still alive, similar age, and the other one just worked in his carpenter shop, like not for sale, like he just did things for the family. He was always like doing things with his hands, and he's still doing it to this day. Of course, he has like the normal issues with his age, but it's fascinating to see that people that hold on to work or just do the work on a voluntary basis and do less of it. This kind of keeps you alive.
It does, and that's kind of why I said the object in motion stays in motion. It works for physics, and I think it works for life as well. If, to your point, you're working for 40, 50 years and then you just stop and that purpose is gone, unless you replace it with something, it's very, very easy for you to either develop bad habits, start breaking down further, mentally, physically, perhaps even emotionally. And then death can be knocking on your door fairly, fairly quickly. So that's part of the reason why I'm still, I'm not doing it because I have a need for money. I'm doing it because I like it, and I'm doing it because it gives me a purpose, and it's something that I can continuously grow and find ways to challenge myself. If anything, what's ironic about it is that my investments have allowed a level of stress to be taken off of the work that I do, and it's freed up my mind. It's allowed me to take more risks. It's allowed me to think outside the box more. I'm already a very outside the box thinker, but once I removed the reality of, if I don't get a paycheck for the next 6, 9, 12 months, I'm in trouble, it freed me up, and it allowed me to do things that I hadn't considered and take things in a direction I hadn't considered. And AI has been a big part of that, because when ChatGPT first came out, I was one of the people I think that was willing to be an early adopter, even though it wasn't very good. And I've been watching its progression ever since. And I kind of steeped myself in it from the time it came out. And that's because before ChatGPT, I was already in message boards and I was already following the trends. So when it happened, I wasn't surprised by it. But I wouldn't have had the time to do that if I didn't have the leeway that my investments gave me. So I did actually take like a month, 1 or 3 months off work, where I was just like diving into things before I found another client. And by the time 2022 came around, and we were just coming out of COVID, and hiring was starting to pick back up a little bit more, and companies were looking to broaden and implement new systems and so on and so forth, I had already developed an entirely new model with entirely new methodologies for doing what I was doing. And I did it with early models of GPT helping me do it. So ironically enough, my investments allowed me to take some time off, which has now increased my income, which is now increasing my investments. So so if you want to talk about reflexivity, that is one reflexive relationship right there. So there's value in taking time off, but notice how I didn't stop. I took some time to reassess, and I took some time to refocus, but I didn't take the time to stop. So I think what you're saying is very true, and I've seen similar studies that if you stop, that's very dangerous. I don't care how old you are. If you were worth $1 billion and you just stopped right now, I guarantee you by the time you're 40, you're going to look a lot older. If you just stopped, versus if you kept going and you found a new purpose, launched your own studio, launched an investment fund, something. You would have to find a purpose, and I think that's very, very important.
I love that. And I also love the perspective of, if you have Bitcoin as your safe haven, you have something that you can rely on for, let's say, 2 months, 5 months, maybe years. Maybe you have a stack where you're like, potentially I can live off that, and you still have positive cash flow. But with that stack in the back of your mind, you go a lot more relaxed to work. You go a lot more like you have the power to work on your own timeline. And this is something I just had to really hard discover the last 2 years, where a lot of people try to press their timeline on you. They're like, oh, I need this till then. I want this done, but then, we have to meet till then. Otherwise this. And I'm like, no, like, this is my timeline. If you want to work with me, that's the thing. And we can work together in that way. And I think this is only possible if you have something like Bitcoin. If you have paycheck to paycheck, you're dependent on that job, you are way more likely to just work on someone else's timeline, which is very deadly also. But I did not even want to get into this topic, but I think it's a very fascinating one, getting into the power of Bitcoin that is not directly seen, just to have that as a cushion in your life.
Well, so the ironic thing about it is that Bitcoin has kind of fueled everything for me. So I'm fortunate that I got in early, but I sold when I shouldn't have. If I kept what I had originally, I don't know what I'd be doing right now. It would be something different, and I definitely would have probably stopped working, and I'll be doing something else. I'll probably be a full-time investor. I'll probably be a full-time financial advisor. I would have pivoted to an entirely new career at this point, or I'd have been maybe a full-time podcaster or something. I don't know. I would have, if I had kept that capital and the amount it was, I definitely would have done something different. But I say that to say this. My Bitcoin holdings are what I leverage to invest in strategy, to invest in NVIDIA, to invest in my position that I used to have in Tesla, so on and so forth. I took out loans against my Bitcoin to invest, and those investments grew. I paid back the loans, so now I have those investments and I still have my Bitcoin. The reason why I was able to take time off and refocus is because I had saved money. I had the investments. I was actively investing. I was watching that grow. So watching that grow, it allowed me to be a little bit more liberal with the savings that I had. And it allowed me to, for instance, I spent tens of thousands of dollars on computers. I bought a whole bunch of computers, like a laptop, 2 servers, a workstation. Now that seems excessive to some people, but in my job with what I do, having the ability to create very, very complex scripts, and in some cases even experiment with algorithms and experiment with the different things that I can do, because I'm working with data cleansing and I'm working with implementing new systems and I'm working with creating data lakes and so on and so forth, it made sense for me to make that investment because I'm an independent consultant and that's what I do. But I could not have done that without Bitcoin. So Bitcoin has facilitated, ironically enough, more comfort in my personal life and more viability, scalability, and impact in my professional life. So I'm very, very grateful to Bitcoin. And of course, I'm a strong believer in Bitcoin. And I think that, even though people say that we're still early, we really are. A lot of people have heard about Bitcoin, but they don't own it yet. We have yet to hit that real inflection point where people really catch on and like at a massive level. And then Lord knows where it's going to go. I think that, Saylor's right. I think that a lot of people in the space are right, that we're going to go to 250, 500,000, a million, multi-million dollars of coins in the next, several decades. And it's my job to maintain my holdings until then and grow them wherever I can until then. Because at some point, it's going to get to a level where you spend $1,000 and it gets you what? A few sats? And at that point, it's kind of like, is it worth it to keep buying, or do you want to live off of what you have? You don't want to sell it, but you want to live off of it. And I think that's where we're all heading to.
Yeah, there's this maturity point of Bitcoin, and there's a lot of non-Bitcoin educated people out there that think that Bitcoin hit that maturity point. I see that a lot. I mean, it's probably like every year when Bitcoin hits new all-time high, but there's people saying like, oh, like 100,000, that it's like hit the maturity point now, like how high can it go? And for us, Bitcoin is very clear, like that's just the start. Like we are barely scratching the first surface of what's even possible with Bitcoin. Even when we think about strategy and when we think about publicly traded companies, it's fascinating for me. And I'm curious what you say on the publicly traded companies, because I actually overestimated how fast this will go with companies. We had strategy laying out the plan, the game theory, the blueprint in 2020. It's now over 5 years ago that strategy did that. And I thought like, this is a publicly traded CEO that has not Bitcoin related business, that has done that in a very aggressive way. I thought this makes more waves into the CEO and CFO's sphere than it did. And now we have 150, 160 publicly traded companies.
Something like that, yeah.
Something like that are into Bitcoin. That number is super low. And even if you look at that list, how many Bitcoin they have, it's laughable. Like they could have so many more. So I think we have now slowly started the institutional adoption. We have no institutional adoption. Still, like I feel like we're at the very beginning of that wave.
Oh, we are. I would agree. So I want to touch on something you talked about with people saying that Bitcoin is a mature asset. I want to draw a distinction between a mature asset and a maturing asset. Gold is a mature asset. Bitcoin is a maturing asset. And the reason why I say that is because let's just take a look at what's been happening since the BlackRock Fidelity ETFs launched, right? Price has been ticking up very, very steadily, but volatility has been going down very steadily. That's not a bad thing. What that means is, and this is part of the what I call the stairway to heaven, I think that Bitcoin's days of 80% drawdowns are over. I think we will see 30%, 40%, perhaps if something really drastic happens, 50%, but I don't think we're going to go from, 160 or 200,000 all the way down to 80 or 75 or something like that. I don't think that's going to happen, because when you have a maturing asset class, you bring in different investor bases. So kind of like what you touched on. We have the institutions in BlackRock, we have the corporates, right? That's creating a new investor base. And to your point, the ETFs hold more Bitcoin now than collectively than Strategy and all the other Bitcoin treasury companies. Now, some can say that's a risk. I don't think it's a risk because, publicly traded companies, they have a lot of ways to survive market drawdowns that an individual investor doesn't have. So we are more likely to see individual investors want to run for the exits quicker than corporations, because corporations have a lot of ways that they can keep the lights running. And that's just a very general overview. We can go into more details on that later if you want. Now, coming to your point, we are very early, and I think this is going to go in phases. If we had, tens of thousands of corporations adopting Bitcoin treasury strategies right now, I would actually be concerned. I would think that's a mania phase. I would think that is a little bit overheated in terms of the interest, in terms of the investment, so on and so forth. However, the fact that we had strategy, then we had Semler Scientific, then we had MetaPlanet, and it's been kind of ticking up. And early in the year, we had a period where it seems like there was a new one announcing every week. I think that's good. What we're seeing right now, I don't think is a bubble. I think it's an early adoption curve. And people need to realize that business is business, and there are going to be some of these companies that are going to fail. That's just going to happen. And when I say fail, I don't mean that the company is going to go bankrupt. I mean that the companies are going to abandon the treasury strategy. I wouldn't be surprised if in the next 36 months, aka 3 years, we see a few of these companies decide to abandon their treasury strategy. Now, that doesn't necessarily mean they're going to sell their Bitcoin. They can simply say, we have 500 Bitcoin, 1,000 Bitcoin, whatever. We are no longer going to be active accumulators. That doesn't mean that they're going to say, we have 1,000 Bitcoin, we're going to market sell. Those are two different things. So with what you're discussing in terms of it's such a small amount, you're right. The number varies, but when it comes to globally traded companies on all the global markets, I think the number is something between 45,000 and 52,000 companies globally that are traded publicly in all the global markets. So that's, the US market, the European market, the UK market, the Asian markets, so on and so on and so forth. So the fact that we have under 200 right now is like 0.002% or something like that in terms of adoption for corporates. So what that means is if we ever get to the point where we have 5%, just imagine what that means. And I think that's where we're going to go. I don't know if we're ever going to get 100% in the next several years, because in terms of, every single company in the world has Bitcoin exposure, similar to how every single company in the world has exposure to their local currency. So for instance, every US company has US dollar exposure. Every German company has exposure to the German or the euro dollars. Japanese companies like MetaPlanet have exposure to the yen. I don't think it's going to reach that saturation level. I think that what we'll see is a percentage, a real percentage. However, 100 years from now, I don't know what's going to happen. In the next 10 to 20 years, I think we can see 1 to 5% corporate adoption of Bitcoin on the balance sheet, which would represent exponentially more companies than we have right now. And I think that's a good place to be. We don't need the Mag 7, but if we get a lot of share, or relatively a lot of share in smaller companies, like mid-sized companies and smaller, I think that's fantastic for Bitcoin.
That's really interesting. And I just looked the numbers up, and it's really, really low. Because we have, according to Google, 53,000 publicly traded companies worldwide.
Okay.
And even if you go with 200 publicly traded companies, that's 0.37%, which is like nothing compared to Bitcoin. And then also the further step of like, what is an appropriate amount of Bitcoin that a company has to have being considered having adopted Bitcoin? Because I would argue that Tesla could buy a whole lot more of Bitcoin. I think they have like 9,000. They could buy hundreds of thousands of Bitcoin. I mean, of course, if they would do that, that would probably jack up the price. That would make it harder for them to acquire it and all of that. But what they have on the cash balance and what they have as possibilities for financial things, the 9,000 Bitcoin do that is almost nothing. That's like 0.01 Bitcoin to the average person, where you're like, oh, you can get more than that. So I don't know. It's an interesting topic, and also like this discussion of what we talked about before. I found really interesting, this maturing and mature asset. what would you say is the indicators or like the potential that Bitcoin needs to reach to classify it as an mature asset?
So, and this is what where I disagree with some Bitcoiners. They think that volatility is going to remain as Bitcoin scales, and I think that's true. However, I think it's going to decrease. So, in my view, Bitcoin as a maturing asset class going to a mature asset class. If we think about hyper Bitcoinization, right? That's the number that's the number where Bitcoin has enough market cap to serve as the base layer for a true new financial system. Whatever number that is. Some people say $1 million, some people say $5 million, some people say $500,000. But hyper Bitcoinization has a number to it. And it just depends on what that number will be. However, hyper Bitcoinization as a concept, I think, doesn't work if Bitcoin is doing this. We need to have stability. So what that ironically means is Bitcoin will need to be less volatile, but increase in market cap. And that's what we're seeing right now. We're seeing the early days of that. So typically when a equity or asset grows in market cap and grows in adoption or grows in holders, it doesn't grow in volatility, typically. So what that means is it's going to grow to a certain market cap. It's going to stabilize. We'll have some sellers. We'll have some volatility. Then it will equalize. Then it will grow again. But at some point, when Bitcoin reaches mass adoption, it's going to reach a market cap, and it's not really going to vary from that much. So let's say that the market cap is, let's say, I'm not saying this is what it is, but let's say it's $10 trillion, right? I don't think we're going to see the market cap go from 10 trillion down to 7 trillion. And then back up to 11, right? I think we can see the market cap go from 10 trillion to 9.6, maybe 9.5 if there's some market volatility, but then go back up because of the nature of Bitcoin being a finite asset. And unlike gold, which is scarce but not finite, Bitcoin is scarce and finite. So I think that creates different dynamics where you'll always have buyers and sellers, but because there's not more Bitcoin being issued, there's just going to be a set number circulating. I think that does create an equilibrium point where Bitcoin is going to get to a number, it's going to stabilize, then get to another number and stabilize and get to another number and stabilize. I think that's what the future holds for Bitcoin. But with that is going to be decreasing volatility. And decreasing volatility doesn't mean that, returns are going to go down to zero. It just means that instead of an annualized average rate of 30% a year, it might go down to 20. It might go down to 15. You'll have periods where when adoption perhaps grows, where adoption picks up, where it can go to 40, and then down to 15. But it's going to be more like digital gold, in my view, long term, than a highly volatile asset that's going to have boom and bust cycles. So that's what a mature asset to me means. It reaches a point, an inflection point, it stabilizes, and it reaches a new point and stabilizes. And I think that's what happened with gold. If you take a look at gold's history, and I think that's what's going to happen with Bitcoin.
I do agree. And I think a lot of, and because there's a very important distinguishing point in there for me, it's like, what do you measure Bitcoin in? Because if you measure Bitcoin in a hyperinflated currency that is soon going to die, and I think that's what a lot of Bitcoiners make that point that say like, the dollar will end. And then if it's hyperinflates, there's like a lot of volatility in there, which I'm like, yeah, but the volatility in a hyperinflated currencies then in the currency, not in Bitcoin per se. And that's what I think that this is what the charts they usually also bring up. And I think I also showed it once where you had the hyperinflation in Germany, I think like 1930, something like that. And you saw the gold price, and the gold price was like massively up and down each month in the hyperinflated currency, but not the gold purchasing power. It was more about the currency and less about gold. And I think that this is a similar thing that can or could happen with Bitcoin. If you measure it in your local fiat currency and your local fiat currency goes to shit, yeah, it might be volatile, but not Bitcoin itself.
Yeah, I agree. And it's all about the denominator. So and that's the thing that people need to be aware of. And I also think there's something that Bitcoiners need to be aware of in the sense that they don't get tunnel vision. One of the reasons why I'm so bullish on AI is because, yes, it's denominated in fiat, but what do you buy Bitcoin with? You buy it with fiat. So the more fiat I have, the more Bitcoin I can buy. Everything that I have is going to eventually rotate into Bitcoin, right? So to your point with regards to, yes, if you measure things in terms of dollar value, it it looks crazy. But I think it's Leon Wonkum that does a lot of the work on Bitcoin and real estate, and I don't know if it's him that created that graphic. But have you seen the graphic where it says a house used to be, 10 Bitcoin, then it went 5 Bitcoin, then you see it like that? Now, even with Bitcoin's volatility, if you have that benchmark of a house, the purchasing power of Bitcoin has been going up while the value of the house relative to Bitcoin has been going down. That's what we're going to see. We're going to see the purchasing power of Bitcoin going up, and the fiat currency it's denominated in, whether that be in Germany, Japan, or the US, there's going to be a lot of gyrations, but Bitcoin itself is going to keep ticking up. And I think that's what we're going to see represented in the price, which is why I believe that, ironically enough, the higher Bitcoin goes in market cap and price, the more stable it will become. Because I actually think that the boom bust cycle in the past, people, correlated to liquidity, people correlated to the halvings or whatnot. I don't think those were the cause. I think those were just coincidental correlations. I believe what was causing the boom bust cycle in Bitcoin, if you take a look at it from its inception to about 2022, was actually stimulus. We had global economies printing a lot of money in those time frames, and to the tune of trillions and trillions and trillions of dollars. And in my view, liquidity seeks quality while stimulus seeks speculation. And I think what we were seeing in the speculative boom bust in Bitcoin wasn't because of the halvings, and it wasn't purely because of the liquidity in the markets. It was because of all the stimulus that was in the markets. And if you correlate that to what has happened since the ETFs have launched, we've had a higher interest rate environment, because in a stimulative environment, we had interest rates that were close to zero. We haven't had money printing to the level that we saw in those stimulative environments. And Bitcoin, since the ETFs, has been ticking up. And that comes back to my point about creating a new investor base for Bitcoin. The institutions represent a fundamentally different investor base, because it's not BlackRock and Fidelity that's buying the Bitcoin on behalf of themselves. They're buying it on behalf of their clients. And their clients are saying they want to hold Bitcoin. Their clients are saying they want Bitcoin exposure, which is causing BlackRock to buy and Fidelity to buy and all the ETFs to buy. That is a different investor base. That is not a speculative investor base. That is what they call sticky money. Sticky money is money that stays around for a long period of term, while hot money is speculative money. They're the ones that rotate in and rotate out. So this all coalesces to my overall thesis as to why I think that as Bitcoin scales in market cap, it's going to decrease in volatility, and it's going to become a more mature asset class. But it's not mature yet; it's maturing.
That's really interesting. And I think those charts very popular. I bring this up quite a lot in the podcast actually, because I think it's such an amazing example when we make it with the houses. We made it in the beginning of the point where you have, I don't know how it's in America, but I assume it's similar. In Austria, you have all the people agreeing on, like a real estate is a great investment. It just goes up over time. And it's always funny when I ask people like, why is real estate going up? Like if I buy a house now, 10 years later, it looks a lot worse. Like it's not as good anymore than 10 years ago. But for some reason, the whole thing is more worth. Like that does not make any sense on a fundamental basis. But it goes up because the denomination is going down. So the US dollar, the euro, whatever you're calculating it, is going down. And then if you flip it and price it in Bitcoin, and this is just a chart from it started in 2011, and it goes down like we had 2013, 2019, a US median house cost like 2,300 Bitcoin. Then 2021, we had 7 Bitcoin. And now we are down to like, 4 Bitcoin, which kind of shows the projection. I just wanted to add this in there because I think this is a brilliant point. And this is a point that get people thinking when they hear about Bitcoin, when they hear about real estate, and when they hear about like the whole money printing thing.
So what's really great about that chart, and I think Leon Wankam's talked about this, and this is something I'm really coming to realize myself. I think that when 1 Bitcoin equals 1 average house, that's going to be a real inflection point where people are going to say, "What? 1 Bitcoin is worth what the average U.S. house or the average Austrian house or whatever house." I think that is going to be very interesting because you will have Bitcoiners that, and let's just think it through. This is the way I think it through. In that world, I'm not selling my Bitcoin to buy a house. I'm taking out a loan against my Bitcoin to buy the house. So I think it creates a new parity in terms of what is a good investment, right? Because as you said, everyone agrees almost globally that real estate is a great investment. It's going to go up. It's the best investment you can make. That's because the value of your money is going down, not because of the real estate going up. However, imagine a world where you take out a 30-year mortgage backed by Bitcoin, which will give you a lower interest rate, which will give you the money to buy the home. Your home goes up in value, but the Bitcoin goes up in value more. So you end up winning on both ends. You end up taking out a loan that functionally is worth less and less to you for an asset that's going up in value without actually losing the principal asset that you used to buy the home in the first place. So the capital outflow relationship becomes very, very different. It becomes a collateralized model versus I have to save up tens of thousands or hundreds of thousands of dollars to put it down on this home, take out a loan that I'm paying interest on, and then buy the home. And the funny thing about it is you don't own your home even when you pay it off. At that point, you're renting the land because I'm sure in Austria you have property taxes. So if you don't pay your property taxes, they're going to seize your home. So is the home really yours? I think that these are all the kinds of changes that are going to come in terms of how people relate to money because of Bitcoin. I have my Bitcoin in cold storage. Yes, I have iBit as well, but I have my primary principal holdings of Bitcoin in cold storage. No one can take that from me. And I can take that with me wherever I want. That is true ownership. That's something that cannot be seized from you. Your home, even though you buy it, can be seized. And I think that maybe this is me being overly optimistic, but as people become more and more aware of Bitcoin, and people become more and more aware that it's really property that is one of I'm not going to say it's impossible, but it's nearly impossible to take from you. Does that cause a repricing of a bunch of other valuable assets? Does it cause a repricing of real estate? Does it cause a repricing of art? Does it cause a repricing of other collectibles? Because, there's scarcity, there's rarity, then there's ability for it to be seized. And I think that people will start placing a higher premium on an asset, on a commodity that cannot be seized.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Seyr podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you, 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Seyr podcast. We have limited editions, we have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
The most important thing for your Bitcoin journey journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I love that topic. How do you actually look at when we look about now Bitcoin, real estate, and the US dollar and the whole relationship there? How does a strategy, specifically strategy, now come into this play where they just buy a gigantic amount of Bitcoin? I think they will keep buying Bitcoin, and it will go in the history of like one of the best trades, maybe even the best trade in this current time. How does strategy fit in this whole thing where it sometimes outperforms Bitcoin, and what role does it play in a Bitcoin world?
Man, there's so much I can say on that, but I'll try to keep it, relatively short. So you already hit on the main thing. Strategy buys Bitcoin. How do they do that? They buy it through issuing equity or raising capital, either through convertible bonds, either through the preferred offerings that they've had recently with Strike, Strife, Stride, and Stretch, or, as I mentioned, the common equity. Now, what Seyr and Strategy are essentially doing, and I think that even long-term investors don't understand this, is think about what people have said about what the US government or other governments should do. They should print money and buy Bitcoin. Right? They should issue money. They should buy Bitcoin, hold Bitcoin on the balance sheet because Bitcoin is going to go up in value. Okay. What is Strategy doing? They are printing shares and they're buying Bitcoin. They're doing the same thing. They are raising fiat capital and they're buying Bitcoin. They are using preferred offerings. They're issuing shares of preferred offerings to the market to buy Bitcoin. They are doing what every Bitcoiner wants the US government to do, and they're getting criticized for it. So that's one angle of it. Another angle, what does this mean? Okay, as Bitcoin goes up in price, and I'm trying to keep things very, very simple here, just conceptual. As Bitcoin goes up in price, the net asset value of strategy is going to go up in price. So even if in the future it doesn't trade at a multiple to Bitcoin, the equity value is still going to go up because of the net asset value of the Bitcoin holdings. The reason why it trades at a multiple is because strategy as a company has all sorts of ways to accumulate Bitcoin that the individual investor does not have. You or I can't raise billions of dollars hypothetically to buy Bitcoin. You or I cannot develop our own convertible notes, scale it, and buy Bitcoin. We don't have that ability. So that's part of the reason why people are willing to pay a premium. They're willing to pay a premium for the Bitcoin exposure. And the Bitcoin exposure increases the volatility of the common stock, which leads to outperformance. The ability for them to issue shares to the market and accumulate more Bitcoin allows them to increase the holdings, which increases the net asset value, which in theory would increase the volatility of the stock as well because they have more Bitcoin exposure, and so on and so on and so forth. What strategy is doing, in my view, is they're going towards two different things. They're going towards systemic importance and they're going towards systemic relevance. What does systemic relevance mean? Systemic relevance means that at some point in the future, whether it be 10 years, 5 years, what have you, whatever time frame you want to use, Bitcoin is going to be higher in price, obviously, just based on trends and based on what we're seeing. So as strategy now holds over 630,000, whatever it is, and they eventually get to 700,000, 800,000, so on and so on and so forth, Bitcoin, and Bitcoin's price goes higher and higher and higher. Because of their footprint, they have made themselves important, haven't they? They have made themselves relevant. They have made themselves essentially a Trojan horse of Bitcoin into the traditional financial markets. And now they have the preferred offerings that are collateralized by Bitcoin. You have a preferred offering that's paying a dividend that's collateralized by Bitcoin. As Bitcoin's price goes up, it will become more and more over collateralized. Now, the potential criticism to that is, oh, Bitcoin is very volatile, so if it goes down, it becomes less collateralized. Perhaps, but where else in the market do you have an offering that's collateralized by anything? Most equities don't have any form of collateral whatsoever. So that is why strategy is working towards getting credit rated based on the Bitcoin collateral and the different offerings that they have. There's just so many different ways that strategy is going to become disruptive the longer this goes on. And as you talked about earlier in our conversation, or maybe this is before we started recording, strategy, when they started 5 years ago to now, they've gone from 1 billion to over 100 billion market cap. That's 100x growth. People are underestimating where they can go in the next 5 years and in the next 5 years after that. It's still a very early model, even though it seems like they're scaling. And what I think they're going through right now is growing pains. They had the first phase of adoption for the corporation. I think they're now going into phase 2, and eventually they'll go into phase 3, and whatever phase 3 implies, and then phase 4. They'll keep growing. They'll keep finding ways to leverage their Bitcoin. I think it's only natural that it's going to happen. It's just a matter of what they do. And that is why I am long-term bullish on strategy, and I'm not allowing myself to get shaken out or swayed by the near-term gyrations in price and all of the FUD that exists around strategy. And I'm sorry, that was a very, very long answer.
I'm really curious because I think if you are someone that has between 10 and 100 Bitcoin, you could potentially be almost like a small community bank at some point for your small neighborhood. And then it's like, okay, what will strategy be if potentially like 1 million Bitcoin? I don't know how like there's a limit to how many Bitcoin obviously they can have, at least latest at 21 million, but like there's probably like a sooner limit, how many Bitcoin they can acquire. But like what is the role of them? Like that's just for me such an interesting thing to think about. What kind of scale that the phase 3 that you talked about, the phase 4, 5, 6 can look like. Obviously I completely underestimated strategy. When I first saw it, I was like, oh, that's interesting. Then it was like, that's an interesting trade. I completely underestimated what's possible. I remember talking on spaces with people when Strategy was acquiring like 100,000 Bitcoin, and then there was a speculation: oh, could they potentially reach 1% of the supply, like 210,000? And I'm like, yeah, like this could happen. And now, just like I don't know, 1.5 years later, 1 year later, whatever the time frame is, now is 630,000. I underestimated how many Bitcoin they can acquire, and I think the longer it goes and the better Bitcoin is going, they can just acquire more and more. They found a really interesting service market where they can service the locked capital into Bitcoin and be a facilitator for that. I'm interested to know on your opinion on how many other companies can do that. I mean, with Bitcoin treasury companies, I always am a little bit annoyed when there's not a distinguishing between there's a Bitcoin treasury company that does something, they provide value, and they just buy Bitcoin. They don't do any bonds, they don't do any credits, they don't do anything. They just buy Bitcoin with the excess cash, which is a Bitcoin treasury company. But there's a difference to what Strategy is doing. And now I'm just curious, like, do you think there's like a market for multiple strategies, or is there just a strategy that found that niche for them to service that capital, and there's not a real need for like 100 other companies to do the same?
So there's a few ways I can take that. So now coming to your point, for the point you made about what could Strategy do in phase 3, 4, 5, and so on and so forth. If we think about their holdings, they have, even if they didn't buy another Bitcoin, and Bitcoin does what we think it's going to do, they can theoretically, and I'm not saying these are viable options, I'm just throwing out ideas. They can theoretically become a liquidity hub for a Lightning network node by themselves, for a rather huge one. Like if Bitcoin is at $1 million, right, at one point, or even 500,000 at one point, they can become a Lightning network hub for themselves, onto themselves. They can maybe even work with Liquid. Liquid is the think of Liquid as Lightning for corporations and institutions. They can serve a purpose there. People may not like to hear this. They can use their Bitcoin to generate yield in various ways. We think about Bitcoin yield right now in terms of DeFi. I think Bitcoin yield is going to become something fundamentally different, where you have actual banks like the Chases of the world, the Wells Fargos of the world, the Citigroups of the world, and institutions, BlackRock, Fidelity, so on and so forth, looking for ways to generate yield on Bitcoin. I think Strategy can have a very, very bright future in that kind of environment as well. Does it increase risk? Yes, but there's the risk that gets increased in terms of Sam Bankman-Fried and FTX or BlockFi, essentially doing whatever they were doing behind the scenes that there was no regulation and no oversight to. And a player like a Chase or a BlackRock or a Fidelity that is not only highly regulated, but there's a high amount of oversight, and they are not incentivized to play the kind of games that the crypto bros would play, right? We love the crypto bros, and in a way, I guess you can say that you and I are crypto bros because we're Bitcoiners. But even though Bitcoin isn't crypto, but there's a difference, right? There's a fundamental difference in terms of what Fidelity and BlackRock would do versus what someone like Sam Bankman-Fried and FTX would do. So I'm not quite sure if the risk profile is the same there. Now, to your question more directly, is there room for multiple strategies with what they're doing? I can say yes. So let's take a look at it. If you take a look at MetaPlanet, what they're doing right now is I think they're looking to scale up their own preferred offerings. MetaPlanet is in Japan, an entirely different region, an entirely different market that Strategy has no exposure to. Makes perfect sense. You have a company like Smarter Web that exists in the UK. And Andrew Webley has said that he wants to become the largest company in the UK through his Bitcoin holdings. I think that's a very viable path. I think that they can serve as a Bitcoin exposure hub with preferreds in the UK market. Absolutely. You have companies like Capital Group, who is in France, but they have exposure to the broader European market. Again, same thing. I think that we will see strategies in different regions, right? Now that we have the different regions, what about within region? So within the US, do I see like a similar Scientific or one of the other US-based companies doing what Strategy did? I think that they will have to find ways to differentiate. They can do preferreds, but I think that they're going to have to find different offerings and different offerings that they can bring to the market that allows them to differentiate themselves from strategy. So I think it's viable. I think it's possible, especially considering that even though we're saying that strategy has, will have 600,000, 700,000, 800,000, whatever number of Bitcoin at some point in the future, when Bitcoin's price is much, much higher. The same is true for a smaller company. They may not have, hundreds of thousands of Bitcoin, but if they have 5, 10, 15, 20,000 Bitcoin, that's not insignificant. They can be a much more targeted, smaller, perhaps even more volatile player, depending on the options that they decide to leverage in terms of how they acquire Bitcoin and what they use to leverage their Bitcoin in the market. Absolutely. So I think that there's room for everyone. It's just a matter of the fact that people need to be patient. This has been going on for 5 years. 5, not 50. We have no idea all the different ways that this is going to scale, and we're still in a very, very early phase. So I think that there needs to be some patience and having a longer term view in the market.
Which leads me kind of to the next question, because this is such a different environment that we are now in. All those topics that we're discussing right now that weren't even discussed like 5 years ago, because like the strategy just got started and it was not that huge of a thing. So how do you look at cycles changing? Because for me, cycles are related to price, and price is related to supply and demand. Supply is kind of fixed. It's not fixed, but like we know what the supply will be, and it's not drastically changing. Demand is the big. There is the difference between supply and liquid supply. That there is something changing, but like the overall supply doesn't change. So the demand side of Bitcoin is like who buys Bitcoin, who sells Bitcoin. And now the buyers and sellers of Bitcoin are looking a lot different than 5 years ago and 10 years ago. Does this also mean that then the cycle thing with Bitcoin changes?
So I think that regardless of the seller profile, I think that the cycle is changing. So to your point about supply and demand, yes, the supply is relatively fixed. It's not increasing by much, and we are relatively aware of where it is. Demand, I think, is driven by, in my view, people say liquidity, people say, the halving cycles, people say scarcity. I think that the primary driver in demand is sentiment. You're not going to buy something unless you think you can profit from it. You're not going to short something unless you think you can profit from it. So I think sentiment around Bitcoin is a primary driver, and that's going to change in terms of what that means in the market. And I think sentiment and the overall picture of Bitcoin will shift because of of his role in the market. And the reason why I say that is that if you take a look at Larry Fink. He went from saying Bitcoin is an index for money launderers or whatever is what he said to saying that Bitcoin is digital gold. That's a fundamental shift in sentiment. And we've seen how just his fundamental shift has shifted the market altogether. The BlackRock ETF getting approved, and thus all the other ETFs getting approved, that represents a sentiment shift. That represents a perception shift of what Bitcoin is in the market. And with that, what feeds that? Well, then you have to take a look at, do you have the sentiment and the overall perception that's there and the overall shift in what Bitcoin is and what people think about Bitcoin in the market? Yes. Now you need the money. And here's where the shift is really taking place. As I mentioned earlier, I think that previous Bitcoin and crypto boom bust cycles were because of stimulus and the amount of money printing that existed between 2009 and 2022 versus pure liquidity and anything having to do with halvings or anything like that. I don't think that's what was driving the boom bust cycle. I think what was driving the boom bust cycle was stimulus and all of the easy money that was coming into the system. We don't have that right now. We have increased liquidity. Liquidity is not stimulus. Liquidity is a function of lower interest rates and more capital being able to come into the market. Stimulus is direct government intervention, injecting capital into the market. Those are two fundamentally different things. We have increased liquidity coming. Interest rates are still historically, or at least periodically, high in terms of where they're at. We may have interest rates that are coming down. We've also had broader macroeconomic and geopolitical considerations. So let's take that all into account. We've had the yen carry trade unwind last year. I don't know if you remember that, but Bitcoin took a dip when the yen carry trade started to unwind a bit. We have the ongoing situation geopolitically with Russia and Ukraine. We've had the U.S. bombing Iran's nuclear missile sites. We've had Iran bombing U.S. sites back. We've not missile sites, but trying to take it retaliation to the U.S. sites and failing, but broadly. We have had the missile strikes in Israel and Gaza. We've had the missile strikes between Israel and Iran. We had the tariff Armageddon situation earlier this year in April that sent the market into a tailspin in terms of what the market thought that was going to mean. We've had all of these events that in previous cycles would have been very, very bad for Bitcoin and would have led to very, very long and deep retracements. But any retracement that existed was bought back up. I think that's a fundamental shift in the cycle. I think that Bitcoin has reached a point where, coming back to what I said earlier again, it is a maturing asset, and Bitcoin is representing a flight to quality versus a speculative instrument like it was in the past. And as I said earlier, stimulus seeks liquidity seeks quality, stimulus seeks speculation. I think what we're seeing right now is liquidity seeking quality. And I think that is broadly represented in the market as well. If you take a look at the Mag 7 stocks, they've been doing very, very well, and it's increasingly representing a bifurcation in the market where you have AI and all the related industries and everything else. And you've had some that are outperforming in terms of capital rotation, but not because of anything quality driven. And with Bitcoin, with Fidelity and BlackRock and the corporations and adoption and so on and so forth, I think we're seeing a flight to quality. Bitcoiners have been talking about a potential flight to quality for a very, very long time. I think this is the early vestiges of a flight to quality. And that's what we're seeing right now. And I think that's why the cycle is changing. We had an all-time high before the halving this time. That's never happened before. We have had decreasing volatility with increasing market cap. We have all kinds of differences right now that are showing that this cycle is playing out differently, which is why I think that the 80% drawdowns are not likely to be coming. We will see corrections, we will see drawdowns, but the boom and bust of the past, I don't think we're going to see that again.
It's almost, and this is kind of a great summary of all that's what's going on, and it's always amazes me because I get a lot of comments saying, "Oh, it's so boring in Bitcoin. There's no price actions," and I'm like, look at the last 12 months, we made like an 80% uptick, 70%. You talked before about the CAGR coming from 30% down to 20%. We have now the last 12 months of 80%, which is phenomenal. Like if we keep just half of that going for the next 10 years, like 40%, that would be astronomical, I feel like. And it's almost this price movement of like, there's not a lot of massive booms, but there's not a lot of massive busts also right now in the price movement. That's why I feel like people don't have that adrenaline kick, that dopamine kick that they had in the past cycles. And I think you just described it perfectly. And I think that's why people say it's boring and the cycles are changing. But I think that's what we want, right? That we want the flight to quality, the flight to safety, even with Bitcoin, and we just see the normal progression to up to that point.
Yeah, and you kind of just hit on it. People are not getting that dopamine hit, right? That's what I mean by stimulus seek speculation. In previous cycles, I can close my eyes and throw a dart at a board and pick an altcoin, I would make money on it. And people are saying, well, it's the same right now. We've had so many meme coins going up in value. It's like, you've had a handful out of almost millions of memes and altcoins that have gone up in value. That does not represent the same thing that we've seen in previous cycles. So I think that people need to have some perspective on that. And the reason why people are saying it's boring is because of what we've just highlighted. The price action since over a year is up like 97%, I think the number is, or whatever it is. And the CAGR, the compound annual growth rate, to your point, if it stays at 30%, that's great. But even if it goes down to 20, that compounds over time. That's a massive return over the course of 2, 4, 6, 8, and 10 years. Now, what's ironic about it is I think that's going to bore a lot of people. they're going to see it and say, well, it's not going to go up 2x in 6 months, so why do I want it? But that's really with any investment, right? People look at things in very, very short time frames. So we're going to have investors, likely institutions, likely corporations, and likely, more savvy retail investors at all levels that are going to see Bitcoin for what it is, and they're going to want to be long-term holders. But the speculators, I think, are going to be out, and they're going to keep trickling out. And I think that's good for Bitcoin. I don't know if we are served as Bitcoiners as wanting Bitcoin to become the global standard for money. If we run up to 400,000 and slam back down to 84, we run up to 1 million and slam back down to 250,000. That doesn't serve that narrative. That doesn't serve that model. We are ironically better served by broader adoption from corporations, from institutions, and from less speculative-minded retail investors. That is what we're going to need to have this thing scale to that future that you just mentioned. That will be so phenomenal of a CAGR of, even if it drops to 20%, it's going to compound year over year over year, and the compounding return is going to be incredible. And I think that is a brighter future for Bitcoin than the boom bust cycles that were fed by speculation in the past.
I 100% agree, and I'm very much looking forward to what Bitcoin will bring to us. And I have one question for each and every one of my returning guests, and you have been on the podcast before. And the question for you is, what have you learned outside of Bitcoin since your last appearance?
Outside of Bitcoin, so well, with regards to outside of Bitcoin, I've definitely broadened my understanding of AI. I've definitely, so I'm one of the people that I don't use AI to think for me. I use AI to help me think. And what I mean by that is I focus on the ability for metacognition. So there's 3 ways that I use it. I use it, one, when I'm testing my thesis on certain investment opportunities, whether that be Bitcoin, whether that be NVIDIA, strategy, what have you. I use AI to test my thesis, and then I retort what the retort gives me, and I keep retorting back. And basically it allows me to trim down the ability of thesis testing. It allows me to have almost like a sparring partner with how I reason on things. And that's become a very, very powerful tool in my arsenal. I've also used that with regards to how I build out my code bases. Now, I'm not going to get very technical here, but let's say you want to automate a process and you have a code structure that has 100 lines of code. That may not be the most efficient way to structure it. It may be more beneficial to have 110 lines of code, but it works more cleanly. Or you may be able to find a way to whittle it down to 50 lines that requires more legwork for you to redo what you've done up front, but creates more efficiencies and time saving down the line, right? So that's another way that I use it. I use it to help me think through the way that I code. And the final way that I use it is, ironically enough, arguing with people on Twitter. I have found, ironically, that no matter how knowledgeable I've shown myself to be, some random person will always feel that they know better or that I'm wrong. So I use Grok with a very, very structured series of events and a very, very structured series of thoughts to help the people criticizing me metacognate through the reason why what I'm saying might have value. I've started doing that recently, and I've started saying to myself, why am I going to argue with them? Why don't I just let Grok argue with them for me? And it saved me a lot of time. And I'm one of the people that I call myself an AI power user, in the sense that it's not just about going into Claude or ChatGPT or Grok with a very general question and having it give you feedback. What makes AI very, very powerful is a powerful user and a skilled user that understands what it is they're using AI for. So as I've gone through the process of using GPT and since its inception to all the other tools that exist now, I've become a more powerful AI user. And I've found, and it's really, really funny to watch it real time, that if I give Grok or any AI tool on any social media platform a very specific set of criteria and a very, very specific construct for a prompt or a question, it gives me all the feedback that I need without needing to argue with the people on Twitter. And it saves me a lot of time.
I stopped arguing with people on Twitter completely.
Yeah. The thing about it in the strategy community, it is, the investor base is so passionate, and in these other Bitcoin treasury companies and in the Bitcoin space altogether, people are so passionate that sometimes it helps to try to guide them through a process. But to your point, after a while, you just have to stop because you realize that they're not going to listen to anything you say. Whether it comes from you, whether it comes from Grok, whether it comes from Perplexity, it doesn't matter. They're not going to listen. And that's the thing that I'm navigating right now. So I guess you can say two things. I've learned how to really scale my AI use, and I'm learning how to just to just not engage with people on Twitter. And the thing that's challenging about that is I think some people view me as a thought leader. So not engaging could be seen as doing a disservice. So it's a very, very delicate balance that I have to strike.
There is like I've gone through so many Twitter threads. Like I'm active in Twitter since end of 2022. So man, it's almost 3 years now, where when you argue with someone, you go down and really try hard. Most of the time, the other person doesn't try to understand you. The other person tries to land a point. And
Yes.
there is only a certain amount of threads that I've gone down through that were genuine, where someone actually asked questions and actually was listening to the points. And those are really, really great. Like I love those threads. I just it's hard for me to justify to go through all the painful ones where they're just trying to land a point and they at some point don't stop reading your thing and just reiterate their point, which I found a lot of people do, and don't really listen to what's been said. So I don't know. Now when someone really puts out a criticism, I try to actually put that in a new post. So addressing that criticism and formulate a new post with that and put it more broadly out on Twitter rather than just replying to one person, because this one person probably just tries to land some point that he plotted. And then I'm like, yeah, I no longer want to spend my time there. But I do see the point of using AI for that. What is you probably want to respond to that, but also I'm very curious what are the tools that you're usually what you're mostly using. I come back to ChatGPT all the time, even though I use Grok and all the other tools. But I don't know, when it comes to like my favorite tool that I use most of the time, like the most time spent in the tool, like that thing is still the best for me.
Yeah. And so to touch on what you said, I think you are 1000% right. It is extraordinarily frustrating when someone or a group of people, they don't care what you're saying. They just want to be seen as right. And they don't engage with what you're saying. And also the other thing that's very, very challenging is that there are people that maybe because we are both somewhat public figures, they think they can be very insulting and they're justified in doing it. So that is also another thing that can take up a lot of mind space if you're not very careful. And that's why I've started using Grok. But to your point, yeah, there are a lot of them that become sunk costs, right? That no matter what you do, no matter what you say, they're not going to listen. So I fully agree. And that's something that I have to navigate because, to your point, the ones where someone actually wants to engage with you, and I don't mean engagement, so like they actually want to engage, they actually want to say, well, hang on, I think this, are you saying this? And then you come back and say, no, what I'm saying is this. And there's actual good engagement between it. Those are great because you can find common ground that way. And both people leave feeling that they were either heard or respected. And I think that's the ideal state. But Twitter is not that. Twitter is a very hostile, toxic environment that you have to constantly spare yourself mental anguish from by just detaching. And that's why I've started using Grok more, and that's why I've started detaching from conversations more. Now, onto your point about which tools that I use. I would say overall, in most cases, I agree with you that ChatGPT is the best tool. Now, I am not the typical AI user, though. So the reason why I say that is I'm a very, very methodical, very, very specific person with things at times. So when I give a prompt, they're very, very systematic. And I have found that almost regardless of tool, when I use that approach, I get a good output. However, for the purposes of what is the best tool overall right now, in my view, it'll have to be ChatGPT. It'll have to be Gemini Pro. Overall, those are the ones that are the best overall. For coding, I still say it's going to be ChatGPT or it's going to be Claude. Those are the two that I use primarily for coding, for helping me go through code. Now, Grok, I know some people swear by it, but from my perspective, it's not the best tool unless you are very, very specific. And that's what I do on Twitter. I specifically refer to a post and I specifically say, this is what I'm saying. Hey, Grok, can you respond and give me feedback on it? When you're that specific, it's very, very good. Now, the problem with that is Grok tends to rely on Twitter a lot for feedback and data, which is garbage. So sometimes you have to really specify, look, search or use DeepThink on Grok to really say that it needs to search and find better sources. But I think that Grok is going to scale and Grok is going to get better. And eventually, it's going to get to a point where Grok is essentially the equivalent of GPT in terms of giving you good feedback and has more specificity and the ability to reference posts and things of that nature. Because I don't know if you've used Grok a lot, but if you're replying to a thread and you use Grok for the thread, Grok is going to look through that entire thread and it's going to start to jumble together facts, which is why you got to be very, very specific and say, no, this post, please let me know what you think. And so it still has those issues. It still has a lot of issues of hallucination. But that's my general feedback on regarding to tools. I used to use Perplexity a lot for research, but I have found that deep research on GPT, deep research on Gemini Pro matches Perplexity a lot of the times. The one area where Perplexity still has an edge is that it's more of a general search tool. So, and sometimes Perplexity can give you sources and resources that you may not find with something like Deep Search or Deep Think on Gemini or ChatGPT.
It's super interesting because I'm somewhat of a convenience user. So I try to figure out, okay, what's the best tool overall that I can use where I can get the best results overall in most of the tasks, because I know there are now many different tools and there is a better tool for certain tasks and a better tool for others. And I just tend to use one. And sometimes I'm wondering, like ChatGPT now obviously has Microsoft and they have a big company, but I'm like, Gemini Pro is probably winning out. Like they have Google behind them and they are the pros in this Google search engine and data collection, and all the apps are in Google. So it would be, I would love for Google just to like have the ChatGPT thing. But whenever I use Gemini, also Gemini Pro, I don't know. Maybe it's just personal preference, but I would love to use something that's integrated with everything, because I'm very much about convenience. Like, it should be super convenient. It should be like, I should ask it about an email and it should already know that email because it has access to my emails. I mean, data collection and privacy is a whole nother thing, but, I would love that. Like if everything is just integrated in the AI, because it really helps you. And now I'm just having to paste emails and do things like that. It's sometimes a little bit of an inconvenience, but man, things are way faster with like it's fascinating how fast and how efficient and good things are going, and also thinking through things. Like before I go to a tax consultant or anything like that, where I'm like, I don't have a lot of clue on those things, I ask ChatGPT, I go deep and do deep thinking modes. Like I have multiple things open and I try to compress everything. I try to compile a plan for myself, test it out. And then when I go to the tax consultant, he's like, yeah, that's a solid plan. Like I would have told you most of the same. Like, and then he has usually like a small, like, oh, here's a small catch. Like you have to think about that. Like most of the, like, it's fascinating. And I think even Michael Seyr said that on a podcast or maybe on stage that he used AI and deep think mode to develop his products and then went to his lawyers to say like, okay, let's execute on that. So man, that's, if Bitcoin wouldn't be here, I would have an AI podcast. I'm telling you that.
Yeah. So Michael Saylor has said that he did. He definitely did. I was there, and I think it was at the Bitcoin conference, or was it Strategy World? It was one of the two, where he said that he used AI to help him develop the preferred products, and he kept iterating through the preferreds. And what you're doing is a version of metacognition. You're helping yourself think through things, and you're helping yourself develop a plan. The only addition to that would be the thinking about thinking piece, but you're using it the way that AI is supposed to be used. See, people are using AI as a crutch, AI as a companion. That's the proper way to use it. And to what you're talking about, convenience, that's coming in terms of full integration. Now, I'm a person that I have the AI tools that I use, but I also have AI models that I run locally on my computers that are just run. And I have what you can do with a locally run model once you actually set it up, once you actually set up document retrieval, once you actually set up all the references and endpoints that you need on your system is wild. The kind of coding that I'm experimenting with right now is far more in-depth and far more complex than I've been doing in the last 2 years. And what's funny about it is, and I've seen a lot of people say this point, this is as bad as the AI tools are ever going to be, this current phase that we're in right now. So just imagine where we're going to be at in 2, 4, 6, 8, 10 years. It's going to be unreal. And I think what's going to happen is that we're going to have local, fully integrated local models that run on our phones and our computers. So what I'm doing right now in a specialized sense, in a sense that I'm downloading an open source model and I'm running it locally on my machine and it's not connected to the internet, I think we will have that functionality on our phones and on our computers natively. So you'll buy a phone. So let's say you buy a Samsung phone. They'll have a local version of Gemini on your phone that connects to everything in your phone, your music, your text messages, your videos, everything. And then you can choose to enable internet connectivity to it in a very specific way. Not so much that you'll be sharing your photos online, but you'll be able to say, my local model, knowing this about myself, searched online and find X, Y, or Z. I think that's coming. And I think we're going to see that within the next 2 to 3 years. The challenge with it is that these models have to get shrunk down enough in a way that they don't lose too much functionality, but they still have enough power to justify it. And that's going to come in the terms of we will have increases in the ability of the different levels of RAM that can exist on our phones, the amount of memory that can exist on our phones, and the kind of models that are going to exist. OpenAI just released their new models. One of the smaller one they say can run on a cell phone. It'll probably have to be a pretty high-end cell phone, but we already have the initial signs of that there. And to your point, what we need now is integration, the ability to have it integrate into everything. So that's definitely coming. And I think that's going to be another adoption wave in the sense of what can be done. So yeah, we have a bright future ahead. We really do.
I love that. And somehow we went from retiring and staying active to Bitcoin's future potential and strategy and treasury companies to AI. So I think it was a very wholesome overall podcast, and I love diving in each and every one of the topics with you. We have an end routine, as you know, where the previous guest is asking a question for the next guest, and the previous guest, without knowing who the next guest is, and the previous guest asked you the question, how did you acquire your first Satoshis?
Oh, ironically enough, the first Bitcoin I got were actually mined. I bought it. I had someone. So the guy that orange pilled me, he actually explained mining and monetary theory and all this other stuff to me. And um, I had a few rigs that I was using for Bitcoin mining, and that's another long story. But I didn't really know what I was doing, and I didn't really know how much power it would consume, and I didn't really understand everything. So he kind of set it up for me, and he kind of walked me through it. So I got my first Bitcoin from him. He sent them to me in a test transaction, and that's how I got my first Bitcoin. So I was fortunate enough that I theoretically and well, literally didn't have to pay for my first Bitcoin that I got. So, but that's how I acquired them, and it's really funny because I don't want to. Oh my god, I don't want to say how much it was, but the amount of Bitcoin I've lost from sending it to the wrong wallet address, selling when I shouldn't have sold, all of that. I don't want to sit down and actually do the math on what that is anymore. I stopped doing that in 2022. I used to do it periodically, and it's just not a good thing. But that's how I got my first Satoshis. They were sent to me in a test transaction, and I mined a small amount, and I purchased, periodically from between 2012 and middle of 2016 into 2017. And yeah, that's how.
I I agree. You shouldn't do this mental exercises because it's living in the past and it is not healthy to you. But yeah,
In my case, it really isn't. It really isn't. No.
But thank you so much, Adrian, for being on the podcast. It has been a pleasure talking with you. And before I let you go, where can people find you, ask you questions, and reach out to you?
So my primary social media, well, really my only social media is on Twitter. So at Adrian_R_Morris on X. I keep saying Twitter, but X. And that's primarily where you can find me. I do True North, the streams with MicroStrategy True North or True North now on Wednesdays. I've taken a bit of a break because I've been focusing on work and on client work and on whatnot because I've been so busy. But that's typically where you can find me. You can also find the rest of the guys in True North at truenorth.com. That's also MSTR truenorth.com. That's also on my profile. So if you wanted to see us there and look at some previous live streams. But yeah, that's about it.
Awesome. Thank you so much, Adrian. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.